Good afternoon. Thanks for joining Taylor Hudson and Hugh McNaughton for our Sprague Energy Market Brief. Today we decided to do a special topic because we've been getting a lot of questions and comments about the changing 2-oil contract on the NYMEX. Now this story actually starts way back in 1978. And no, the comment is not about this group of people, but we had to ask, would you have invested with a small company called Microsoft and a guy by the name of Bill Gates back in 1978? I think we all wish we would have. But what was really happening back in 78 is that the NYMEX, believe it or not, was on the verge of collapse. They had had most of their trading volume dedicated to the potato and had had a default fiasco in the mid-70s. And we're wondering what contract was going to carry the NYMEX into the 80s. They wound up pulling an old heating fuels contract out of the drawer, reconfiguring it, calling it the 2-oil contract, and it started to trade in November of 1978. Believe it or not, 5 years prior to the arrival of the WTI crude contract. So what's very interesting to us is the history here. The number 2 heating oil contract saved the NYMEX. So as such an important piece of NYMEX legacy, Hugh, I'm dying to know, what on earth this discussion is about for the end of the 2-oil contract, and what is the CME doing? What is going on?
Well, Taylor, over the last year, the CME, which are the owners of the Globex and NYMEX exchanges in New York, have made the decision to end, as the slide indicates, the heating oil contract and replace it with a ULSD contract, a low sulfur diesel contract. This in response to the accelerating move away from higher sulfur fuels, again, in turn, in response to environmental concerns over the health and another impact of that kind of a product. Here's a look at a snapshot of the heating oil futures contract going forward. And in April 2013, by golly, it's the end of an era. Not to exaggerate, the number 2 oil comes off is going to be delisted and replaced by what we think will be, Taylor?
The new contract, which is the New York Harbor ultra-low sulfur diesel contract that's listed for trade by the CME. It will go by the ticker symbol LH. And if you look online at, let's say, cmegroup.com, which is where these screenshots came from, you can actually look at settlement prices, believe it or not, for March 2012 all the way out through, gosh, there are more than June of 2013. I couldn't fit any more on this page. Problem is, there's a small problem right now, and that's what's got everybody, I think, a little bit nervous. Is you see over here in this column that says volume. That means how many contracts are outstanding between participants. You see a big 0, not a zilch 0, both for volume and open interest. In other words, this contract does technically exist on the exchange right now, but if you called a broker and said, boy, I'd like to buy 5 lots of April 2013 New York Harbor ULSD, they would say to you, sorry, can't find a seller.
Not a lot of liquidity.
That's right, not a lot of liquidity. So what's made everybody nervous, or the problem so far, is nobody's using it yet, and everyone is standing around looking at each other and asking who's going to be first. And when nobody's using it, then your carry-on effects are option market makers, so people who might sell you a call option or a put option out in April or May of 2013 suddenly have nothing to hedge that option with. They have no underlying futures contract to hedge it with. And you may see some traditional forward market makers like wholesale suppliers or anybody who might sell a wet barrel out on those months shy away from giving any quotes until this contract really starts to take off in trade. The good news is that we've been here before. The gasoline market went through a similar phenomena back in 2006 when the RFG contract left and it was replaced by the RBOB contract. And in that case, there was a lot of concern, a lot of worry, what was going to happen. And towards the end of the RFG contract's life, you started to see the volume and open interest switch over to RBOB. Our own supply group internally at Sprague is telling us that they believe some of the use of this contract is going to start to take place as early as this summer. So we don't think it's going to be a wait until the 11th hour before we get a transition by the industry into this contract. One kind of interesting thing to note and kind of a puzzler given the fact there's no volume or open interest, these settlement prices that are listed for ultra-low sulfur diesel, at least yesterday, the March 2012 contract was a 2-cent discount to the heating oil, lower valued cash market product. So clearly the price levels that are shown here are not representative of what really happens in the cash market today. So,
well, Taylor, let me ask you this. As a consumer of Sprague fuels, what will be the impact on me?
Well, this is the interesting thing, and the piece where we believe a lot of confusion starts to come into the discussion about the end of the 2-oil contract. At the wholesale level, we really think that the change out from the number 2 contract to the ULSD contract won't change much in day-to-day activities by us or our customers. And that stems from the fact that we use the 2-oil contract right now as what we call a distillate benchmark price that we add our logistics and our margins to, which are commonly called basis. We take those settlement prices from the number 2 contract, we add basis to them, and we post rack prices or make people forward market offers all the time on different distillate products like kerosene, ULSD, and heating oil. Notice here, Hugh, that I'm using the 2-oil contract for every one of these rack price decisions, but I have different basis levels attached to each product. What's essentially going to happen is the 2-oil future settlement price is going to be replaced in this formula by the new contract settlement price. So after the changeover or around the time of the changeover, at the wholesale level, all that's going to change, we're still going to post rack prices. Products still going to be available. Heating oil will still be available in all those markets where it hasn't been phased out. It's just a matter of us using the ULSD futures contract as the benchmark and adding the appropriate basis to it. So what may change is the basis levels themselves, but not necessarily any of the ways that we go to market or offer pricing to our customers.
Okay, in which case the conclusion is that the change in the benchmark will have no significant impact, or no impact at all for that matter, on the actual cost of the product to a consumer. Here in this slide you can see that the basis for kerosene relative to number 2, the existing number 2 fuel oil benchmark is a 40 cent a gallon premium. It gives us over a $3.05 flat NYMEX price, a $3.45 rack price. The U.S. number 2 futures go away. Along comes ULSD. The basis, which was 40 over the heating oil, is now 35 over a 310 value, an underlying 310 value. And by golly, the price is $3.45, just the same as it would have been if number 2 futures or number 2 oil was still the benchmark. It's the basis that changes, not the final price.
So in conclusion of today's sort of presentation, what we wanted to get across was the fact that just because the 2-oil contract's going away does not mean that outright pricing is going to go up or down by a certain amount. What will change is the relationships between prices and the benchmarks used by the wholesale environment. So if you've been tracking your rack basis at a particular terminal every day, and you've noticed that you can buy product at 10 cents over the NYMEX screen or the NYMEX futures contract price, after the changeover, you may see that the pricing is more like 8 cents or 7 cents over instead of 10 cents over. In a similar fashion, forward fixed price differentials will also change. So hopefully this sheds some light on this topic for our customers and is really sort of a separate discussion than whether we think prices are going to go up or down generally. And we wanted to make clear to everyone that Sprague is ready to make these forward markets that meet your requirements all the way through August of 2013 right now. We're quoting options as well as forward wet barrel commitments. And this is in every state, not just New York with the coming on of ultra-low sulfur heating oil, but every New England state.
Right.
So thank you all very much for joining us, and we hope you have a fantastic day.